Welcome back, Reluctant Preppers. We have a returning guest tonight from Britain joining us. Alasdair Macleod, Head of Research at goldmoney.com, is with us. Thank you, Alasdair, for joining us again here on Reluctant Preppers.
That's very much my pleasure.
We wanted to circle back with you following the Brexit vote and your return from travels to understand with you several points. One is, what does this tell us about the spirit and character of the times for the British people? What does a post-Brexit world look like for Britain itself and its commercial relations with other countries in the world, and then the euro and the eurozone? But then also, if you could finally clue us in on what's going on with gold availability and pricing in Britain and around the world following the Brexit. Where is gold going next? So if we could circle back to the beginning then and start with, what does the Brexit vote tell you locally for the spirit of the times going on for the British people, and what do you think it signifies and signals?
Well, it was very interesting because the Brexit vote was really won on the idea that being in the EU meant that we had absolutely no control over our borders. And that indeed was what the Brexit campaign was fought on. I think there was actually a more important underlying point, which most people missed, but quite a few people actually did get, and that is that remaining within the EU meant there would be the gradual erosion of democracy, because the EU has absolutely no responsibility towards any electorate. It only has a responsibility towards the heads of government. So, it really meant that as Britain was increasingly absorbed in the EU, we would have less and less say over the executive. We would not have the opportunity, in effect, to say to them, 5 years of your management or mismanagement is up. Therefore, I'm either going to vote to support you and you do it again, or I'm going to vote against you because I think you're rubbish. That is the whole point about democracy. That gets lost in the EU, and it is actually planned out of the system as the EU develops. So we escaped from that, and I think that is actually probably the most important point. You could argue on things like trade and all the rest of it, and I would certainly argue that we're better off with free trade, if you like, decided by ourselves, rather than trade agreements agreed throughout the whole of the EU, over which we have not much say. But if that has any validity, then one assumes that our politicians are better at negotiating these things than, or have a better understanding of what trade is about than the EU bureaucracy. And so it's one bunch of politicians against another. And I can tell you, our politicians are not all that competent. So, it's difficult to argue a free trade case on that basis. And I think it really does come down to one thing, and that's democracy. Now, having said that, the Brexit vote was a surprise. The problem that gave was that the UK Treasury was absolutely determined to frighten us into voting Remain. And as such, it used two computer models, one of which was a long-term model, and that allowed it to say that each household would lose an average of £4,300 every year if they voted for Brexit, if the Brexit vote went through. Now, that was actually completely fallacious, apart from anything else, because what they're talking about was that they're just getting GDP and dividing it by the number of households. That's not the same as saying, which they implied, that each household loses £4,300 of income every year. So that was one thing that was completely wrong. And the other thing about these models is that you put garbage in and you get garbage out. So it means you can actually goal seek your answer. And it's completely meaningless. And there was a very interesting paper written by Professor David Blake of the Cass School, and he showed that the basis of the assumptions were so dodgy. He called it a dodgy dossier, which harks back to the Iraq War. That's what we described, if you like, as the false intelligence reports on weapons of mass destruction. Weapons of mass destruction, which was all involved in that war. I mean, the Treasury modelling and the intent behind it was that bad. So if you bear that in mind, we now have a situation where, okay, voted Brexit, shock horror. And the fact that Mark Carney, the governor of the Bank of England, came out and supported, in effect, the Treasury analysis, really helped undermine sterling and all financial markets because everybody had been conditioned to think that if we actually went for Brexit, it would be a complete economic disaster. And that, I think, explained the immediate reaction of the markets. And you referred to gold, the sudden sharp rise in the price of gold. However, while sterling has remained about 9% below where it was before the referendum, the other markets have just recovered. And I mean, I look at what's going on in the economy here, and if you go to London, people are still going out. It's still very busy. Business is continuing as normal. The restaurants are full. The cafes are full. The theatres are full. So where's the recession? I mean, it just hasn't happened. If anything, the Treasury's predictions slowed down the economy ahead of the Brexit vote for the simple reason that people put investment plans on hold. And, if, rather than, let's say, giving business out to other businesses, in other words, sort of the whole of progress effectively came to a halt ahead of this referendum because of all the uncertainty that created. But now it's out of the way, we're all returned to normal. So it's been interesting in the sense that the Treasury got this horribly wrong. They frightened everybody as a result, and the outturn is not nearly as bad as anybody thought.
Internationally, do you foresee any fallout in broader terms from the Brexit? Will it be thwarted by the powers that be, so even it will become just a symbolic vote but won't be enacted? Will Britain be punished by the EU or the US in trade? Will other nations follow suit? Do you believe that the euro will be weakened and fail because of this, or will other fiats taken down with it? So if you could just kind of give us, what do you think the fallout in the broader picture will be from the Brexit?
Well, I think there is no fallout as such. So I wouldn't go looking for that. I mean, the idea that suddenly, because we haven't withdrawn from business, we're still there. And furthermore, after we trigger Article 50, we then have a 2-year period to, if you like, get out of the EU. So we're not getting out of it tomorrow. This is 2 years from when Article 50 is triggered. And Article 50 will probably not be triggered until next year. So we've got some time, if you like, ahead of us on this. So actually, the idea that there's a trigger on this is completely wrong. I think that the EU does have enormous problems. And the problems really concentrate on three things in a sense. One is the increased socialization of the EU economy, which basically means that private industry just cannot progress at all. The second is that it is, industry in Europe and particularly places like Italy and Spain and France are so overloaded with debt that they're finding it a great struggle to continue to survive. They've become zombie businesses in effect. The third thing is that you do have a genuine banking crisis which needs to be resolved. Now, I think they will resolve these because basically the ECB will throw money at the problem. The Germans may not like it, but the ECB, I am convinced, will deal with it. They will throw money at the problem and they will rescue the Italian banks, for example, and the Portuguese banks. But to give you an example of how intractable the problems are, the non-performing loans in the Italian economy are roughly 20% of GDP. Now, that is a huge number. If you then take into account that over 50% of GDP is actually government, then non-performing loans are roughly 40% of private sector GDP. And that's your real problem. That actually, I mean, it is so bad. The position for business in Italy is so bad that you can rescue the banks, but the economy is still a complete mess. And you need to face up to that. And you need to deal with it. You need to let bust businesses actually go bust. There is no sign of that actually happening. And so the problems in Europe, I think, are considerable. I think they're intractable. I think the banks are probably no more than the messenger in this. They will be rescued, but it won't actually change any of the underlying position. And ultimately, the effect, I think, will be very, very negative for the euro. The timing on that, obviously, we don't know. But that's how I would see it. I mean, Brexit, I think, is just such a it's just a nonsense issue. It is a non-issue, really. It never was an issue, except the Treasury made it an issue and frightened us all. But the reality is it's not an issue.
Now, you did write recently an article about gold availability and pricing action following the Brexit, and you mentioned that there's been some startling discrepancies or differences in response between, for example, the price of gold increase in Britain versus in elsewhere, especially in Japan. If you could enlighten us a bit as to what you see those local or regional drivers are that are affecting that.
Yes, I mean, the main difference between what was being going on in places like Japan and the UK in terms of the gold price is really a reflection mostly of the currency. Sterling took a very big knock, as I said earlier, on the Brexit vote. It fell roughly 10% at the time. We're still about 9% down, I think, from the pre-Brexit level. And so the price of gold rose from something like £850 an ounce. It got up to £1,060 an ounce, and currently it's trading at about £1,002 or £1,003 an ounce. So, you can see how this has moved. In the case of Japan, because the yen, if you like, has sort of followed a fairly strong course recently, the rise in the price of gold has been a lot more muted. But interestingly, if you look at the chart of it, it's been a lot more consistent. And given that the Japanese economy is one where you've got negative interest rates at the moment, you have a history of people being prepared to accept a 1 or 2 or 3% return per annum quite happily and think that they've got a good return. You've got to look at gold as far as Japanese investors are concerned in that light. And then you can begin to appreciate that even though the gold price has gone up only 7-8% in yen terms, we would think that's pretty unexciting. But to a Japanese investor, that actually is a very good return compared with everything else. So Japanese demand for physical bullion is not on anyone's radar at the moment. But I was interested to see that Tanaka bought one of the Swiss refineries. Now that tells me that Tanaka, who the big Japanese gold bullion and retail dealers in Japan, they are the largest. They, I think, want to secure supplies. So I think their internal business forecast would probably suggest that they see developing demand in their market in Japan. Now, that's interesting because with nobody else really seeing that yet, I think when that happens, it could be an additional strain on the market.
An additional strain meaning pressure for physical demand on gold?
Yes, a strain in the sense that the available stocks, if you like, of gold, the above ground stocks, there's quite a lot of demand for the available gold, as it were, the gold that people are actually prepared to sell as opposed to sit on. And sources of other demand are likely to have a pretty positive price effect. Now, having said that, we have seen, because of currency effects, a slowdown in demand from Asia. And what's very interesting is that quite a lot of gold has moved from the UAE in the Middle East to the Swiss refiners. And my inquiries suggest that actually what's happened is that the refiners in the UAE have stocked up on African gold and all the rest of it. And meanwhile, their markets have slowed, like the Indian market and so on, and also Southeast Asia. And the consequence is that the market for the 1 kilo bars which they've been really smelting for, with that diminishing, they've had to sell on their stock because because of the financing costs, and that's gone back to Switzerland. So you've got these sort of cross flows. Now, against that, the slowdown in demand that we've seen from China and India and to a lesser extent, perhaps the Middle East, I think has been counteracted by big demand for 400-ounce bars, which are coming back into London and are going into vaults being held by the ETFs, the physical ETFs. So there's been quite a change in the way the market is actually, the flows, if you like, in the market. So that's something we need to watch quite carefully.
Speaking of international movement of gold, that's where I wanted to return finally to the section that you're a specialist in your company, is about overseas or international storage of precious metals. A lot of the viewers on our channel are very concerned that they make sure they have a secure location for storage of their precious metals, gold or silver, but they also are keenly interested in making sure that they retain accessibility to those physical metals should there be political upsets or economic turmoil. And could you please talk us through what you see as the strongest case for a diversified or international component to your gold storage, especially addressing the concerns that realistically people would have if, look, if I don't even trust that my own domestic custodian is necessarily going to be cooperative in the case of an upset, what hope would I have that some nameless, faceless person halfway around the world is going to be able to get me my metals if I need them?
Yeah, I can understand that entirely. I think that there are two issues here. The one is the likelihood that your government, if you store gold in your jurisdiction, the jurisdiction of where you live, whether that government actually in extremis might actually try and grab those stocks. This has obviously been a considerable worry after the precedent in 1933 by Roosevelt was committed. So I think particularly Americans have been very alive to that maybe happening again. The way around that is obviously to find a foreign jurisdiction to store your gold. Now, I'm not suggesting that anyone breaks the law, but it just does make it a little bit more difficult for a government to lean on its citizens to repatriate gold from abroad. It has less control over the issue. You can always, if it really gets bad, you can personally walk. Then really what you're looking at, I think, is the local law when it comes to property rights. And that, I think, is very, very important. And in this sense, I think there's sort of two approaches that you can take. You can either look at somewhere like Switzerland, where they do have strong laws protecting property rights, or you can go with a country which works on the basis of English law, or was originally English law, which again enshrines property rights. So, on the one hand, you would have somewhere like Switzerland. On the other hand, you would probably have somewhere like Singapore. And those indeed are two of the most popular places for gold storage. Another approach you can take is to think in terms of cultural differences. If you have, let's say, the American government turning around and deciding they want to confiscate gold, it would actually be unlikely that they would try and do that as a sole nation. They would probably lean on other nations like the Brits and the French and the Germans and so on and so forth to come in and do something similar with their citizens. In which case, you might choose to say, okay, well, if we store somewhere like Dubai, the Arabs aren't going to pay any attention to the Americans in that situation. Or even perhaps in Hong Kong, similarly, China would far more protect or allow Hong Kong to protect property rights in the event of a property grab, such as that implies. Now, I can't see that sort of property grab is anywhere on the horizon. The problem we always have is that when governments get into difficulty, they start behaving irrationally. And I think that's actually that sort of longer term thought rather than this is something very likely at the moment.
In case people do opt to store a portion of their holdings of precious metals overseas, what are the means by which they would gain access to them? Are there specific logistical challenges with getting gold actually moved out of one country, moved back into your country, that sort of thing? Is there reporting and declarations? Are there limits annually or that sort of thing?
Yes, I mean, the whole thing gets tied up in anti-money laundering and all the rest of it. I mean, typically, if you're returning into the US with with gold bullion, if you have more than $10,000 worth, I think that's the figure that you then have to declare it. I don't know, maybe somewhat different, but there are these things that are sort of set down, if you like, in customs form, which is all, which are all framed on the basis that that people should not be able to move the proceeds of crime or the proceeds of tax evasion and so on and so forth. A cynic might say, I think with some justification, that it's the government wanting actually to pretty well control your money one way or the other. So you do have those restrictions. And most people who store money abroad are really looking to store their wealth, I think, rather than, let us say, their foreseeable spending money. It might be worth thinking in terms of that distinction.
And anticipating that, would most people have a strategy that they would need to expatriate to that other jurisdiction if they wanted to, rejoin their wealth in the case of a major breakdown? Or what do people talk about in terms of separating themselves geographically so far from their wealth?
Well, I mean, you say the question, you sort of question, what do people talk about? I mean, the answer is they don't really talk about it. But I think that quite a lot of the mega rich effectively have made themselves as stateless as possible. So if you're a Russian oligarch and London turns against Russian oligarchs, then you go somewhere else. You probably go to Switzerland, or you go to Monaco, or you go to, wherever is sort of pleasant. And you would probably keep your money in a third jurisdiction. You wouldn't necessarily move to where your money is. And that's another thing, actually, which, in terms of the paranoia that the mega rich would have, that's the sort of thing they do. So I think, money is separate jurisdiction from where you live. And, if you don't like the way the government's cutting up because they're prejudiced against you or whatever, then you just move to another jurisdiction. That's the way the mega rich do it.
Any other words of wisdom you have for our viewers as they're watching? There was quite a rush up in gold and silver prices in the last month or few weeks following the Brexit vote and the U.S. Independence Day. And people are seeming to watch and wait and wonder whether this is going to be the start of a new bull run for precious metals after the sort of a 5-year hiatus, or if this will be knocked down in profit taking and shorting and so on by the powers that would like to suppress that price again. And you address that also in your article. If you could just touch on what you see as the most probable outcomes in the midterm here.
Well, there's two sort of conflicting things, I think. One is that you've got an awful lot of interest developed on the buy side by what COMEX would categorize as speculators. And in this case, it's sort of the managed money category, as it were. On the other side of that, you've got the bullion banks and the the sort of, if you like, the market makers, the people who ensure there's liquidity in the market. They do that basically by shorting it. So they're short, and they are likely to lose a hell of a lot of money if the gold price goes up from here. In the past, usually the bullion banks and the market makers have won. So the question this time round is that given things have become so extreme on the buy side amongst the speculators, are they going to win again? Bearing in mind that the bullion banks basically are too big to fail, and will be backed by the central banks is actually quite a difficult bet as far as the speculators are concerned. But there is one thing that is interesting, and that is that institutions, normal investing institutions, have begun to develop an appetite for gold. They have seen that it's been so far the best performing asset class, if you like, in 2016. And not only that, but anyone who has a sort of casual interest in gold sees that there are very, very good reasons, and the reasons are getting better all the time for holding on to gold as part of a portfolio strategy. Now, the problem that the fund manager then faces is that physical gold is not a regulated investment. So it's actually quite difficult for him to include physical gold in a portfolio. One way he can get around this, of course, is to buy an ETF like GLD. Another way in which he can do it, and I think quite a lot of fund managers do this, is they use the futures market to gain that long-term exposure. So what they will do is they will take out a bull position in the futures market and look to roll it from month to month, or as their position gets towards the near month, they will then switch it out. And indeed, if you've got a good futures broker, you can probably roll it at either no cost, or you can use the opportunities in the market when you get sort of pricing differences, actually to make a little bit of money on the roll. So if that is actually what's happening at the moment, then it explains why open interest has accelerated to well over 600,000 contracts on COMEX. And furthermore, it says that attempts by the bullion banks to try and manipulate the market down are going to have to work against this new factor, which hasn't been a case before. In the past, there have been 2 or 3 instances where the bullion banks have failed. So the question that we're really facing is this another of those instances where the bullion banks fail to contain the market. And we will only know the answer to that, I think, when we look back in history.
Well, that's it's not a conclusive answer, but it's an honest one, and we appreciate that awareness of what the major factors are that are driving that that contest, and we'll stay closely interested. A lot of our viewers are closely interested in how that story plays out, because it affects them very personally. If people want to find out more about international storage options and other services that Gold Money provides, where can they find you, Alasdair?
Well, goldmoney.com. There's also another. We're obviously part of the BitGold thing, which is a payment system, and gold is money, which is really what it is all about at the end of the day. So bitgold.com, you can open an account there, or you can open what amounts effectively to a savings account with Gold Money itself.
If you could take just a minute to familiarize us with what BitGold actually is, how it works, and the ins and outs of that.
Well, it's basically BitGold is an account, if you like, that instead of your deposit being on the balance sheet of a bank and owed to you by the bank, this is your gold money, as it were, held in escrow for you. Where we act merely as custodians. It's held in a fully secure vault, fully insured, and all the rest of it. If we go belly up, it's still your gold. It's not on our balance sheet. So this is a far safer systemic situation for someone using money than using the banking system. And basically what you do is you can preload an ordinary debit card, which you can then use as if, it's a MasterCard. You can use in any ATM, any restaurant, just normal spending. So what I did when I was in Canada, and this was actually quite interesting, when I was in Canada, we had all the volatility over Brexit. I had a number of debit cards and credit cards at my disposal, as we all do. And I found that when gold was right up, I would use my gold, my BitGold card for spending. And when it was down, I would use my sterling card for spending. And actually, I protected myself quite well from the fall in sterling in terms of buying things in Canadian dollars by playing those two things off one against the other. So it's quite interesting. And there's another aspect that, if you're not sold on the idea of actually using gold for day-to-day purchases, then think about using a gold prepaid card in conjunction with your local currency card. It can be, when gold is up, you spend that. When your currency is up, you spend that. And actually, you get a marginal improvement on what you pay.
Well, Alasdair Macleod, head of research at goldmoney.com. We always appreciate your visits here with us on Reluctant Preppers. You always give us a great level-headed insight and education on the markets and what's going on. And we just appreciate you being here with us, and hope we can have you back again soon.
I would look forward to that event, and thank you for having me on.
In Britain and around the world following the Brexit, where is gold going next? So if we could circle back to the beginning then and start with, what does the Brexit vote tell you locally for the spirit of the times going on for the British people, and what do you think it signifies and signals?
Well, it was very interesting because the Brexit vote was really won on the idea that being in the EU meant that we had absolutely no control over our borders. And that indeed was what the Brexit campaign was fought on. I think there was actually a more important underlying point, which most people missed. But
welcome back, Reluctant Preppers. We have a returning guest tonight from Britain joining us. Alasdair Macleod, head of research at goldmoney.com, is with us. Thank you, Alasdair, for joining us again here on Reluctant Preppers.
That's very much my pleasure.
We wanted to circle back with you following the Brexit vote and your return from travels to understand with you several points. One is, what does this tell us about the spirit and character of the times for the British people? What does a post-Brexit world look like for Britain itself and its commercial relations with other countries in the world, and then the euro and the eurozone? But then also, if you could finally clue us in on what's going on with gold availability and pricing.
Than the EU bureaucracy. And so it's one bunch of politicians against another. And I can tell you, our politicians are not all that competent. So, it's difficult to argue a free trade case on that basis. And I think it really does come down to one thing, and that's democracy. Now, having said that, the Brexit vote was a surprise. The problem that gave was that the UK Treasury was absolutely determined to frighten us into voting Remain. And as such, it used two computer models, one of which was a long-term model, and that allowed it to say that each household would lose an average of £4,300 rubbish. That is the whole point about democracy. That gets lost in the EU, and it is actually planned out of the system as the EU develops. So we escaped from that, and I think that is actually probably the most important point. You could argue on things like trade and all the rest of it, and I would certainly argue that we're better off with free trade, if you like, decided by ourselves, rather than trade agreements agreed throughout the whole of the EU, over which we have not much say. But if that has any validity, then one assumes that our politicians are better at negotiating these things than, or have a better understanding of what trade is about. But quite a few people actually did get, and that is that remaining within the EU meant there would be the gradual erosion of democracy, because the EU has absolutely no responsibility towards any electorate. It only has a responsibility towards the heads of government. So, it really meant that as Britain was increasingly absorbed in the EU, we would have less and less say over the executive. We would not have the opportunity, in effect, to say to them, 5 years of your management or mismanagement is up. Therefore, I'm either going to vote to support you and you do it again, or I'm going to vote against you because I think you're